Though credit growth in the private sector had been on a downward trend prior to the coming into force of the banking law 6 months ago, latest research by the Kenya Bankers Association shows that the scenario has since worsened, with households the most affected when it comes to accessing credit. According to the research, banks have reduced the amount of cash loan to households to 15.5% from 18%. Bankers claim higher interest on deposits has not influenced the increase in customer deposits.
But in the process of portfolio reallocation, in the context of risk profile, banks are basically shifting their portfolio from high-risk investments to low-risk investments. And that is really the detriment of SMEs and households. So that's one major indication, and that's the level of disbursements basically tells you the amount of credit that goes into the market. And these three scenarios of approvals, disbursements, and credit application speak to the trend that you're now familiar with insofar as credit to private sector is concerned. And that trend basically is this. We've seen the credit to private sector come down from as high as 17% in January 2016 to as low as 4.3% by January 2017.
Bankers further claim that the interest rate cap is responsible for the reduction in share prices at the Nairobi Securities Exchange.
Credit is not growing at the same rate. It's actually attributable to the law. So we are not attributing the whole thing to the law, but there are aspects of it that are attributable to the law, and part of it are attributable to phenomena that is way beyond what's happening in the banking sector.
The argument against a cap on interest rates by lenders is, however, not going down well with consumers, who feel the banks should lower interest rates further to attract more customers.
Free economy, most of these banks normally take advantage of people. So the best thing, let's peg it somewhere. But if the bank wishes, as I've seen some of the petrol stations, the bank have put a price tag of what's supposed to be charged. But you just go around, you find some of petrol stations have reduced it. So that is the way it should be in the bank rates.
We have around 30 banks, and when they report their financial reporting, they say they are making billions. You see, that means that they are still getting more money than they should be getting. So to me, I propose that the interest should even go down.
No, it should remain like that. That one will help us, common wananchi, at least to move on with life. It's hard now. Yeah, we are hard up with the present economy. So for us to get a good livelihood, we should persist by that. They should not scrap it.
Bankers believe as long as the government keeps borrowing using treasury bills and bonds, the lenders will squeeze lending to Kenyans and still be in business. Nicholas Ndwati, News Hour Business.